Good afternoon, and thank you for joining this AFME members briefing call on Capital Markets Union. I am Pablo Portugal, an Advocacy Director at AFME's Brussels office, and joining me are my colleagues Cedric Pacheco, who is a manager in capital markets for AFME and runs our CMU steering committee, and David Ostojitsch, a director for technology and operations at AFME, and he runs our Tech and Ops committee. And I am delighted to welcome two distinguished members who will be participating on this call. Adriana, Ennab, who is a director for public policy at Credit Suisse, Europe and the UK, and is a member of AFME's Tech and Ops committee, and Edmund Lakin, who is deputy head of public policy, global markets and sustainable finance at HSBC, and he chairs AFME's sustainable finance working group. We will talk about a number of areas and developments in the CMU Action Plan. Before we go into some of the specific areas, we wanted to start with an overview of where we are on CMU and the latest steps that have been taken. As many members will be aware, the original CMU Action Plan was launched in September 2015, and it was positioned very much as the flagship project of the current European Commission in the financial services area. The overall objective is to put in place the building blocks of a CMU by 2019, and there have been a number of specific objectives to be achieved. The first one is to develop a single market for capital by removing barriers to cross-border investments. Second, to improve access to financing for all businesses around Europe. Third, to diversify the funding of the economy and reduce the costs of raising capital. Fourth, to maximize the benefits of capital markets so they can support economic growth and job creation. And fifth, to help SMEs raise finance more easily. So those have been the kind of general objectives of the Capital Markets Union project. There have been a large number of measures that have been launched. The early wins of CMU included the development of a new framework for simple, transparent, and standardized securitizations. And I should say that the work on securitization was very much positioned as the kind of leading project of the Capital Markets Union at the start. There have also been achievements regarding a reform of the prospectus regulation with a view to improving the environment for public listings in the EU. There was also work done on promoting infrastructure finance and establishing a better regulatory treatment for infrastructure as a distinct asset class. And there has also been work on venture capital funds, among other areas. By June 2017, the Commission undertook a midterm review of the CMU Action Plan. The Commission noted that it had delivered 20 out of 33 measures proposed under CMU, and a number of work streams were announced in the midterm review, and other work streams were noted as still under development. So just to mention some of those, the work on securitization continues now that the level 1 text has been adopted in primary legislation. We are now in the process of drafting the secondary legislation in the level 2 process. The Commission also launched a review of the governance and funding of the European supervisory authorities, which includes, of course, the role of ESMA as the leading markets authority at European level. There has also been a directive on insolvency reform published that is still going through the legislative process. There has been a proposal reviewing the prudential treatment of investment firms. There has also been a major proposal on establishing a pan-European personal pensions product. A lot of work has been done also on developing capital markets in the Central and Eastern European region, where markets are less developed. And work continues on removing barriers to listings for SMEs, which is an important area of focus in the CMU as well. By the time we had the midterm review in June last year, of course, the UK referendum on EU membership had taken place, and Brexit became a reality as well. That means, of course, that the EU would be losing as a member state, the kind of member state that hosts the majority of the capital markets activities, or I should say wholesale finance activities in Europe today. So Brexit has also given much food for thought in terms of the future of the CMU project. We will talk about the latest CMU package that was proposed in March. We will talk about sustainable finance and FinTech in particular. There have been other proposals that came out this month on covered bonds, on crowdfunding, on securities ownership, among other areas. So the current package that we'll talk about, in broad terms, takes us towards the end of the current term of the European Commission and the current EU legislative cycle. So we should expect in the coming months to see some reflection also on the next phase of CMU for the new EU legislative cycle that begins in 2019. So clearly Brexit is a factor there, but also the need to develop capital markets in the EU 27 will be very much a priority for the European Commission. We expect it to be in the future term. Briefly, we wanted to note some of AFME's engagement in CMU work streams. Clearly, as a capital markets association, it's in AFME's very DNA to support the CMU project and be very engaged in it. We've published a number of important papers. In November 2014, we published an agenda for CMU, which included a number of proposals that we saw reflected in the Commission's action plan. We've also done major papers on insolvency reform, on developing capital markets in the high potential economies of Central and Eastern Europe. We produced a major study with the Boston Consulting Group comparing capital markets in the EU and the US, and that was our Bridging the Growth Gap report. My colleague Cedric Pacheco led an important work on the shortage of risk capital for Europe's high growth businesses, and this was a paper that was led by AFME and supported by a number of associations. And we've also done work on green finance. This is, of course, in addition to being very involved in a number of expert groups that were listed there, and also extensive advocacy and engagement on the CMU work streams. I would like to now turn to the area of sustainable finance, and Edmund Lakin will talk to us about the latest action plan and the Commission's work in this area.
Sure. Thank you very much, Pablo. So I was going to cover three things around sustainable finance. Some background, just in terms of how we've got to kind of where we are and what some of the global dynamics this are. Overview of the action plan, and then just a few sort of thoughts from my side on in terms of the scope of the action plan. Rewind to 2015. There were two landmark international agreements which together provide much of the backbone for the work that we are talking about today. This was the adoption of the UN Sustainable Development Goals and the famous Paris Climate Agreement. I would also add that the in 2015 and around the time of the Paris Agreement, the Financial Stability Board's Task Force on Climate-Related Financial Disclosure was created, which itself has been an important piece of work driving the sustainable finance agenda. Very quickly on the Paris Agreement, one of the things that the Paris Agreement recognized was the role of private finance, private capital markets in delivering the commitments made at the political level. And this is something that's worth bearing in mind when we consider the EU's attempts to use the CMU as a vehicle to make the financial sector work in the interests of the wider economy. What has also been increasingly recognized is the shortage of green assets. So rather than a shortage of potential investment in the green and sustainable economy, it's actually the shortage of the assets within which to invest in. So off the back of these initiatives in 2015, and with growing political support for the European Commission to define its role around sustainable finance, in December 2016, a high-level expert group on sustainable finance was created to, and I quote selectively, help determine how the current financial policy framework should be adjusted to get private capital behind sustainable investments and help have a clearer picture of financial risks related to the transition to a low-carbon, sustainable economy. The initial work of the group was to focus on primarily environmental issues, but over its lifetime and as momentum increased, it began to sort of look at broader sustainability or ESG related issues, so something broader than just environmental. The HLEG published its final report in January 2018, and as Pablo has mentioned, the action plan has been recently adopted. 10 points within it. They are on the slide in front of you, and the action plan is based on the HLEG's recommendations. I'm not going to go through the work of the HLEG, but I will refer to some of the recommendations within the actual action plan there. So the action plan has three main objectives. First one is redirecting capital towards green and sustainable investments. The second is embedding sustainability into risk management. And the third one is increasing transparency and long-term thinking. The backdrop to this is a recognition that to achieve the EU's 2030 climate targets, which were agreed in Paris, which includes a 40% cut in greenhouse gas emissions, the EU has to fill an investment gap in Europe estimated at 180 billion euros per year, so close to 2 trillion until 2030. I attended the launch of the action plan last week, and one of the things that struck me from both Commission President Juncker and Vice President Dombrovskis was the coordinated statements to highlight the fact that the public sector cannot finance that on its own, and they will need private finance to help fill that gap. The first thing to mention to do with the action plan, and probably the most operationally important part of it, is the creation of a new technical expert group. This sort of 30-member technical expert group will be responsible for vital pieces of what you could call the sort of sustainable finance infrastructure within the EU. This group will be involved in creating a EU taxonomy, an EU green bond standard, with other work looking at other product standards for green assets, low carbon, new low carbon indices, and also metrics to improve disclosure of climate related information, which can be seen to relate to the EU's work on the TCFD. So the first one, in terms of redirecting capital or greening aspects of the capital markets is the creation of a taxonomy, which is essentially defining what it is that we want to do, what green and sustainable means. To quote from Dombrovskis, they see this as the common trunk from which other actions will branch off. And anybody who has looked at the action plan, there is a graphic at the back of it which highlights this exactly. This is one piece of work around definitions which will be used potentially to drive all the other actions within it. Taxonomy was one of the main recommendations from the H-leg. There is an expectation it will be quite detailed. It may contain screening criteria in terms of what's in and what's out and metrics around it. It is noted that it needs to be dynamic, and by dynamic, I mean that this needs to be something that can evolve and respond to political changes, policy changes, technological changes, science changes, and everything that goes along with climate and sustainability issues. The intention is for it to focus first of all within climate change mitigation and then be extended to adaptation and other environmental activities. There is going to be a framework legislation, I believe by the second half of this year, which will essentially embed in law the concept of an EU sustainable finance taxonomy. The bits that go into it and the actual sort of screening criteria and metrics and the detailed work will then be delivered via this expert group. But we can expect to see clear definitions or sectoral definitions, I'm working to the assumption of, around what the Commission believes are the most important constitutional parts of what this taxonomy is. They were also looking at the creation of an EU green bond standard, and there are proposals to reform prospectus rules as well around what goes into a green bond prospectus. The action plan refers to this being based on existing best practice, which we would assume to mean the IFME green bond principles, which is similar to the recommendations made by the high-level expert group, but it will probably articulate that external verification, so the idea that you get your bond certified by somebody, will be mandatory. There's also some work around benchmark reform, looking at methodologies and design of low carbon benchmarks. Risk management, and here we talk about the debate that we've had around green supporting factors or brown penalising factors. Within the action plan, there is no explicit green supporting factor and likewise no brown penalising factor, but there is a firm commitment to review and possibly recalibrate capital requirements to better reflect risks associated with climate and other environmental risks. It's made absolutely clear that this will be based on data, and any such factors that they choose to do has to be consistent with the taxonomy work. There's also changes to investor duties, looking at so-called fiduciary duty, building on a recommendation of the H-leg and an earlier consultation on this, meaning the Commission is going to propose legislation anytime soon, I believe, to explicitly require institutional investors and asset managers to integrate sustainability factors and risks into their decision-making process and increase transparency towards end investors on this. And there is also going to be a review of how credit rating agencies integrate sustainability ratings. A consultation on this may well look at whether there is a need to actually mandate CRAs to incorporate sustainability into their credit assessments. Transparency. Principally, this is around the Task Force on Climate-Related Financial Disclosure. There is a consultation, I think, at the moment on a sort of fitness check of corporate reporting to see if sustainability reporting is adequately considered within the reporting that's out there, but the Commission will look at its non-financial reporting directive, which importantly captures both financial and non-financial companies, to review the guidance towards facilitating TCFD implementation. This is possible, but this is one of the first steps towards the EU beginning to sort of mandate TCFD disclosure. The technical expert group is also tasked with working on metrics, and people that know the TCFD will realize that one of the recommendations is around metrics and targets. So there are kind of multifaceted parts of TCFD within this section. Another element is to review to see if boards should be required to disclose a sustainability strategy. That is also another part of the TCFD. So there are potentially 3 different initiatives within some of the action plan work, 2 parts of it primarily related to the expert group, which will be looking at some sort of, well, could be looking at some mandating of TCFD recommendations. Finally, and this goes back to one of the other long-standing H-leg topics of discussion, is short-termism in markets. And ESMA are expected to do a review into that. So if I can maybe just close with a few comments to do with this. The action plan is about the strongest, most ambitious and actually clearest approach to greening the financial system out there. A lot of this work will go a long way, not just to grow the green market, but actually, not just to grow the existing green part of the market, but actually towards greening broader financial markets. The plan leaves very few actors untouched and actually uses a number of the tools available, legislative and non-legislative, over quite an accelerated time period to achieve its stated objectives. I'm not going to go through the next steps, but as you can see, we are, I think we're still March 2018. There is an awful lot to be done over the next year and a half to get this done. So, a few comments to do with it. With the technical expert group and with the broader parts of the action plan, it is important to ensure that there is sufficient private sector engagement in its development. I mentioned at the start the steer from the Paris Agreement about the role that the private finance sector or private finance can play within this. The Commission has set a very clear ambition and quite a punchy timetable within which to achieve this. And this presents a real opportunity for inclusive leadership from the EU within this, bringing in both the market and actually other markets to showcase the work that they're doing and leverage insights and expertise from outside of the EU. In sustainable finance, I think it's very easy. It is acceptable to say that no one actually has all the answers to this issue. Second of all, infrastructure. I spoke at the start about the role that private finance can play and how this has been recognized, but also the recognition that there are not enough investable assets or bankable projects out there. I highlighted the fact that the Commission has a 2 trillion funding gap by 2030 to meet its climate objectives. And potentially there could be more within the action plan about how the policies relate to broader non-financial policies that the Commission is working on. And finally, to do with the taxonomy. The focus on creating a technical expert group to create a taxonomy which will underpin the major changes does present a possible concentration of policy risk within one document. Developing an EU taxonomy will be helpful, but is not necessarily critical to move ahead with these other actions, and will need to be well defined and dynamic and developed with significant private sector input. So to reiterate, the taxonomy will be helpful, but there are very strong reasons to make advances in the other policy sectors in the absence of that taxonomy being created. And I think I'll leave it there.
Thank you very much, Edmund, and I'm sure you'll be happy to take questions later on sustainable finance issues. Let's now turn to the FinTech Action Plan, where Adriana, Ennab, and David Ostojitsch will tell us about their perspectives.
Thank you, Pablo. So you spent a bit of time talking about the FinTech Action Plan that came out at the beginning of March as part of the CMU update. So FinTech's obviously got a lot of traction in the last 4 or 5 years. We see a lot of FinTech buzzwords and activity going on all across Europe and globally. So things like blockchain, distributed ledgers, AI, crypto, ICO, you name it. So taking a step back, the European Commission is trying to put its arms around the whole FinTech space back in March 2017, launched a consultation around FinTech. It's quite unique because it brought together 2 different departments in the Commission, DG FISMA and DG Connect, so looking at financial stability, cap markets union, and also networks and technology. Based on the inputs from the industry on that, they've used that to come up with the FinTech Action Plan, which is what came out in March. The plan that came out in March has got 23 items to it. One of those is legislative, which is crowdfunding. And the rest of the other items in there are broadly activities that will now take place between now and towards the end of 2019. So this FinTech Action Plan that's come out, which we'll just touch on in a moment, really starts to set the foundation of what the policy agenda around FinTech and technology might start to look like post the upcoming European elections and a new Commission. So next slide. So the FinTech Action Plan is broadly in 3 areas. The first of those is around encouraging innovation. So this is looking at things around the licensing rules for FinTech companies. We know the ECB has done a fair bit of work on that as well. It's looking around standards for FinTech, so things around standards for distributed ledgers, APIs, identity management. It is the legislation on crowdfunding, which you mentioned. So this is looking at a passporting regime for crowdfunding platforms across Europe. Again, it's trying to help spread the flow of capital. For the crowdfunding regime itself, it's only looking at amounts of €1 million and below. And then the final one here is looking at sandboxes, another hot topic in the FinTech space. And a big part here is looking at what best practice might be for sandboxing in Europe. There's a large pillar in the plan which is around cyber, and this builds off the back of the 2017 cybersecurity package that came out of the Commission. Key takeaways here around information sharing, and this plays into the role, a more permanent role for ENISA in Europe, and also around cyber threat testing. This is around penetration testing and work going on here again around ECB and the TIBA EU framework. And the final pillar is about the uptake of new technologies. This is looking at, is the regulatory framework today fit for purpose around regulated technologies? And the Commission is looking to set up an expert group on that this month. Also setting up a FinTech lab, which would bring supervisors, regulators, and tech firms, FinTechs, etc., together to explore some of these technologies and do some education around it. And also looking at the cloud services, particularly around code of conduct. So it's looking for the industry to come together and see what code of conduct could be for porting of data between cloud providers, and also trying to come up with some more definitions industry around things such as access rights and audit for cloud, materiality around outsourcing, etc. And then the final one is the setup of a DLT, or Distributed Ledger Technology Observatory, which has been called the Blockchain Observatory, which will be run by a third party called Consensus. And this will look at developments in DLT across Europe. And again, the aim here is trying to increase collaboration. Adriana, from looking at the plan high level, what parts do you stand out as kind of good areas and good takeaways?
So I guess let me just back up by saying that I think from the beginning we've always said that FinTech was, a critical part of the capital markets union. Without a digital single economy in Europe, the rest of it wasn't going to work. And I guess, for us, the crowdfunding and the peer-to-peer, not so important, but to aid the development of the capital markets, you needed to get access to finance and move from the reliance on short-term, as mentioned earlier. So therefore, crowdfunding legislation is paramount to doing that. And due to the less developed capital markets in Europe, less developed than it is in the US, there's a general lack of funds available for these projects, and the capital markets helped with that. I have to say the lack of concrete actions shows the delicate balancing act that the commissions had to take. The task force, which again, I think it was quite amazing work that they did, because it was, as you said, FISMA and Connect, but they also worked with all the other units that worked on security, on cyber, pulling together the knowledge, the strong knowledge base they had. And I think this is the first time the Commission has done that. So the lack of concrete actions, so they wanted to move towards the legislative front whilst keeping technology neutrality and bolstering the rapid growth in the fintechs. Will bring access to financial services and more jobs across Europe, which is obviously the point of the capital markets union. We were very happy to see the speed with which all of this happened and worked on addressing a couple of days after the action plan came out, the EBA that was tasked with many of the issues that came out in the action plan. They published their roadmap with the main thing on there that was interesting to us was the FinTech Knowledge Hub, and which we had a discussion with them for industry, possibly looking at one of the first topics in there to be cloud, looking at how do we work with the CSPs, do we look at guidelines, do we look at standards. So really taking on board what we have been speaking with them about the last year, which is, how do you facilitate our working together with our partners in this? The sandboxes, I have to say that was, again, that's something that the EBA will be working on, looking at potentially standardizing across Europe. Unfortunately, the member states don't want to join one sandbox, but if there can be standardization and possibly work together on that, maybe they can work with the FC on their global sandbox. Some of I think probably my favorite, if I had to choose one, would be the assessment of fit for purpose in the current regulations. I think that's very important to bring that up to the digital age, and they're setting up an expert working group to start looking at that across all regulations, and then obviously any new ones that come in to ensure that it takes into account existing technology and potential technologies going forward. And obviously that will require more education in these technologies, which I think the Commission is taking very seriously. They came out with a education action plan in January, which looks at obviously education within the schools and pushing for STEM, but also within the Commission itself and within the different member states.
Thanks, Adriana. So we just look at the activities that are in there. We touched on a few. Just to call out some of the highlights, things that's going to happen over the next few years, which I think are probably kind of most noteworthy. So the first is the set of this EU FinTech Lab that we mentioned. This is a great way to get that collaboration. As we've touched on, this plan is all about trying to balance that need to continue innovating while also managing the risks of some of these potential technologies, and also making sure that there's that education and awareness across the whole industry. So things like the FinTech Lab are a great example of that. I think the Commission's going to do a great job on that one. The second one here we talked about is the set up of an expert group. That will be set up Q2 this year with a view that they would come back with a report on the fitness of EU FS regulation probably by mid-2019. The other one to call out would be the end of this year. So we talked about sandboxes. So the plan is looking to recommend some best practices for reg sandboxes in Europe by the end of the year. So that'll be another important piece, and we look forward to both being part of that, but also seeing what those recommendations look like.
One of the things that I also wanted to mention, David, was, although it wasn't mentioned in the action plan, but again, it came out, I think the day after, was the formulating of a high-level expert group on artificial intelligence, which would then work on building a European AI alliance, which is something that we have been asking for the past year in order to get experts from different fields, from the technology, from the business side, from legal, from regulatory, from policy, to work together to look at processes and potential solutions to any problems or ethical issues. So that's something, so very quickly, they came out after the action plan already lined up to do the further work that was required. So it wasn't just coming out with, okay, these are the things we need to work on, but actually work has already started.
And then the final one I'd probably call out here is around the ESAs are being asked by the Commission to explore the needs for guidelines on cloud outsourcing, which again we know is a piece of work that the EBA certainly have been looking at and pushed out their final recommendations on cloud outsourcing at the end of last year as well. So just to summarise, from an AFME perspective, the FinTech Action Plan that came out shows a very strong intent that technology and cyber innovation will be some of the main drivers around future EU policy. And this is just one of many activities in the FinTech space that have certainly taken place over the last 2 years in terms of consultations or events. And we are really now starting to see in 2018 this technology and cyber-centric policy agenda emerging. So it's great that the plan actually puts a focus on it. It's directionally very clear, but as we mentioned, most of the items are quite exploratory. So it's very much a wait and see approach, but trying to cover all the moving parts and I guess ready to make changes as needed. It does place a fair amount of emphasis on the ESAs. So this builds on top of the ESAs review at the end of last year as well. So each of the ESAs, especially EBA and ESMA from an AFME perspective, they've very much got their own FinTech agendas as well and items. And we'll be looking forward to seeing how this Commission plan and the ESA's own FinTech initiatives all do align when we look at things like blockchain and cloud.
I just also wanted to say when the CMU came out that we were very concerned with was the fact that although this was looking at spreading investments internally without borders in the CMU, that there was a danger of closing it to investments from the external players in the market. And we want to make sure, and it is mentioned a few times in the action plan in collaboration with the international global standards setter, but that's more on ICOs and virtual currencies, saying that that's a global nature. I think it's something that we need to look at and make sure it's done across the board with all the technologies. There are no borders with technology, as we know, and especially with cybersecurity, there needs to be two-way, which is something that we're working on, two-way reporting, and also collaboration amongst the regulators and all the players in this field. So I just wanted to mention that that's one thing we want to make sure. It does come up in a few places, but really strongly, if I had to say one thing that we should work on is to make sure that this is a global plan.
And I think I'd emphasize that from the cyber perspective. The cyber elements in this plan are very strong, but certainly more so than FinTech, cyber does need that global view. There's certainly less borders when it comes to things like cyber attacks or cyber events, for example. So, we encourage the plan to continue looking at that global level as much as possible. But in summary, it's very much a collaborative approach, which is exactly what the industry has been looking for. So it's great to see that recognised in the plan. It does remain technology neutral and risk and principles based as well. So I think from our perspective, the plan is a great balance of trying to manage, like I say, that innovation, the risk, while allowing some of these things to continue.
Absolutely agree. Yeah, thank you.
Thank you.
Thank you very much, Adriana and David. We now move to questions and answers. And now is a good time to start submitting your questions to us. I would like to start with a question to my colleague, Cedric Pacheco. Cedric, AFME has argued that a key focus of the Capital Markets Union should be improving access to risk capital and equity finance in particular. How much progress do you think has been made on this, and what would AFME like to see as next steps?
Sure, thanks, Pablo. Well, AFME, since the very beginning of Capital Markets Union Plan, has been a strong supporter of the Commission's objective to improve equity capital markets access to small and growing firms away from bank lending source of finance. And in the various action plans, the Commission sets out a package of measures designed to expand funding options for non-listed and listed businesses and improve the incentives for various types of investors. And for instance, the review of the prospectus regulation is expected to simplify the access to public markets for such firms. And in its latest action plan, and as mentioned earlier by David and Adriana, the Commission put forward new rules that could help crowdfunding platforms to grow across the EU single market. And this regulation could allow platforms to apply for a EU label and provide service across the EU despite the variety of national regimes. But there are many obstacles that remain for small businesses to thrive and grow in the EU. For example, the business angel capacity is underdeveloped, and there's a lack of exit opportunities, which is undermining the development of the market. There's also far less venture capital funding available in Europe compared to the US, and the size of the pension funds in Europe remain a major obstacle to the development of the markets. And of course, public markets can provide large amounts of capital to more mature, high-growth companies, and a favorable environment will revive the primary equity activity. And we therefore welcome the Commission's consultation on the barriers of SME listing that has been published earlier this year, and which AFME has responded to, and look forward to the result of the consultation. And finally, we also note that the Commission is also expected in 2019 to assess the impact of MiFID II provision on SME equity research.
Thank you very much, Cedric. A question on the FinTech Action Plan has come through. We are being asked, how does the action plan fit with other related initiatives in Europe? For example, the work that is being done by the EBA, ESMA, the ECB. Do you see all these moving parts complementing each other? Is there overlap? How do you see the picture?
So, yeah, as I mentioned before, I think the fact that the EBA came out with their roadmap just a few days later shows that they are working very closely together. So they will tackle very specifically the work that the FinTech Action Plan has laid out. So things like licensing, sandboxes, cloud, working on potential standards with the industry. ESMA also has the plan working on sandboxes and best practices, an understanding of distributed ledger technology, FinTech license mapping, which is also something I believe you mentioned ECB is working on previously, and also the owner for crowdfunding. The only problem is that there could be some confusion with who owns what. For instance, and also the EBA is just the banking authority, so how are you going to get the others to the table? What happens with those that are outside of their remit?
Yeah, I think the confusion part is one that I think there's just a little bit of making sure all these initiatives do align up that Adriana has just mentioned there. I think that'll be an important step that is taking place now, certainly over the next few months. So everyone's quite clear on what's required and who feeds into what. So a lot of these activities actually do end up giving the results that we're all hoping for now.
We're happy to see in the paper that they do mention the international standards. As we know, the FSB has actually done quite a lot of work on artificial intelligence, and BIS as well on different risks that could come up with technology and innovation. And hopefully they will continue to work together so that we're not all working in little bubbles.
Thank you very much. Maybe I can ask a question to Edmund. Clearly, the Sustainable Finance Action Plan aims to position Europe as a leader in that sector. There are a range of actions there that you described. Do you think the action plan contains sufficient elements for Europe to be leading at global level? How are we compared to what other jurisdictions are doing?
Thank you. That's a very good question. I think actually the work that Europe has done over the past, when it sort of started this in 2016, has been some of the most rigorous work that I've actually seen on sustainable finance. When I first started getting involved in sustainable finance 3 or so years ago, one of the reports that I read at the time was done between an organization called UNEP, which is the United Nations Environment Programme. There's a guy in that called Nick Robbins, who was also on the HLEG, which they did with the People's Bank of China on greening the financial system, which was a sort of long and detailed report coming out with some very specific recommendations of what you can do to, if your strategy is to green the economy, then one of the mechanisms is actually to green the financial system. And that was a groundbreaking piece of work at the start. And I would say actually the work that the HLEG has done and now within the the action plan is as important, as rigorous, and as leading as there is at the moment. I think the plan, as I mentioned, covers many actors, many institutions, and will go a long way to actually the policy goal of working towards kind of greening the capital markets. I will just come back to the point that I sort of raised before, that I think the plan is about the kind of mobilization of capital, and the plan does refer, there is one part which is to do with the kind of infrastructure part of it, and I think the kind of key now is to sort of link the mobilization of capital with the other ongoing European Commission sort of initiatives through the FC, Juncker Plan, Energy Union, climate commitments, to actually focus on where it is that the money is going, the investable asset, the investable assets, and the kind of project pipeline there to do it.
Thank you very much, Edmund. Perhaps a question to our FinTech experts. Clearly, cryptocurrencies have gained a lot of focus this year. Do you see this as an area ripe for regulatory action, or do you think authorities will hold back on this?
Well, it's interesting, the Commission had a roundtable on cryptocurrencies in February where they looked at this, so it's great to see that that taking place. I think from a European perspective, it's recognised that cryptocurrencies and ICO, any activity around that probably needs to sit at the global level. And I know that's probably being discussed at the G20 level. I certainly don't see any initial regulation or activity in this space, but I think it's certainly one that's going to be around for some time and will continue to be around. I think eventually, maybe towards the end of this year, early next year, we might start to see something.
I think the EBA discussed looking at it, and that if it needed to, lead to legislative, that they would be the ones looking at it. I just wanted to mention something that FINMA came out with guidelines about a month ago, basically saying that if it walked like a duck, talked like a duck, and swam like a duck, it was a duck. So if it was a payment utility, then it would, a payment token, it would be subject to anti-money laundering regulations, and if it was an asset, it would be subject to securities regulations. So if it was a utility, whatever that combination is. So possibly looking at something like that where it fits into an existing framework for the time being, but right now they're not. They just, again, but it's one of the topics, or one of the technology innovations, currencies, whatever you want to call them, crypto assets, cryptocurrencies, that they will spend time researching this next year.
I think what's interesting, certainly around the ICO space itself, is even though there isn't any firm regulatory action really taking place, just the focus on it is actually helping probably to clean up certain things about ICOs anyway. So I think anything that's happening at this point is a good thing.
Thank you very much. I see no further questions coming through. So perhaps by way of conclusion, I would like to say that following the Brexit vote, some may have asked whether CMU would remain a strong priority in the European Union, and I think the answer or the message so far from EU authorities is that the CMU is more important than ever, particularly more urgent given Brexit. And as we can see, it's a very active agenda with a number of priority work streams at political level. So AFME very much supports the ongoing work, and we will be looking forward to engaging in the various issues. So that brings us to a conclusion. Thank you very much for joining us, and have a good afternoon.